Hi guys, it's Steve from the FX Academy. Following up some previous emails, I'm just going to explain to you exactly how I monitor my trade positions. In front of you, you can see a diagram. Obviously, I've just literally done this for 100 pips trade just to make it easy for you guys to monitor. But what I'm going to do, I'm going to show you exactly how I trade. So potentially I trade every trade one-to-one. Okay, so I'm risking 100 pips. I'm looking to make 100 pips clear profit with obviously the ability to extend. So what I'm going to do, guys, at 50% of my trade, so my overall position, okay, I've got a stop loss of 100 pips, my entry. So when my trade position actually reaches, okay, I'm going to do this we're doing pink for now. When my trade position actually reaches 50% of the overall trade, okay, I have an alert. And what my alert does is signal me to move my stop loss. I will not move my stop loss till my trade has run at least 50% because that's creating enough momentum for me to progress all the way to my take profit level. So what I'm going to do, guys, is as soon as my alert triggers me for 50%, I'm literally going to move my stop loss, which is here, all the way to the 25% level of my trade, so around the 25 pip mark. If I'm going short, I will always get my stop loss above a candle, so it could be between 20 and 25%. If I'm going long, I will always put it below the candle. The reason we do that is purely for the candle. Okay, so we've got a nice sort of bullish candle. Okay, we want our stop loss to be underneath the candle, so obviously the next candle carries up and we can obviously progress further. But if the candle was to then come down, we know that the bottom of this candle is protecting itself. So as long as we're underneath it by a few pips, it should hopefully potentially could save us on the trade. If it doesn't, we're going to be stopped out at 25% or around 25% of our trade. So we won't be losing any money. Right. The reason I do this, guys, and I'm going to explain in quite deep detail why I do this. The first thing is obviously because we're setting off as a one-to-one trade. If the market, okay, so we've hit 50%, we're actually risking 150 pips to progressively make only 50 pips. So we're technically risking like 1.5 to make half. So it's no longer a one-to-one trade. So by moving our stop loss to 25%, you can see that we're now in a 2-to-1 trade because we're only risking 25 pips from obviously the 50% back to the 25% to potentially make take profit one, which is at the 100 pips mark. Yeah, so we're risking 25 pips to make 50 pips. So the mathematics are always going to be stacked in our favor. We've gone from a 1-to-1 trade all the way to a 2-to-1 trade. And obviously what happens is, guys, if the market was to pull back and stop us out at 25%, there's a good chance that the market's going to go back even further and probably stop us out. So we'll be losing all that profit we've made. So of course, then what I do, have another alert set at 75% the trade. So if this price was to obviously go back a little bit and then forwardly progress back on ourselves in the right direction and hit the 25% mark, my stop loss would get moved all the way to the 50% level. Okay, and exactly the same thing. Then, guys, we're backing a one-to-one trade. We are literally risking 25 pips to make 25 pips. Okay, so now what I do, so say we're risking 25 pips, guys, at 75%, we were literally back in a one-to-one trade. Obviously, my take profit one will always be on if I cannot physically watch the trade. If I'm able to watch the trade, okay, I will not have a take profit limit order. What I will do is progressively, once I make to 125%, I will literally bank 100% of my trade. When I'll do 150%, I'll bank 125, and I will stalk the whole price in 25% increments. And that is potentially a really basic way on how I monitor all of my trades for obviously minimum risk to maximum reward.